You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. The program where, surprise, surprise, we break down the world of volatility. We're coming at you a little bit different time this week, a little bit earlier than usual. So I apologize if you're trying to listen live and we've thrown you off your game, but we got a lot going on here in the studio today. I won't be here for normal show time, but I want to make sure you guys got at least a taste of Vol Views today. It's probably going to do a little bit of a quicker program today. But don't worry if you're feeling left out, because later on in the day, you'll get a double dose of content. You'll have an advisor's option coming to you later on in the afternoon. Another one at a weird time, but we're just cranking things out throughout the network at all sorts of crazy times. So stay tuned for that. That's coming at you, I believe, at 2 o'clock. It's just Vol Views time. It's crazy, the usual time. So we had to move things around a little bit. So you'll have your double dose of content today. For those of you listening on podcast, you won't even notice a thing. And joining me at this special time here, just because he wanted to make sure you guys got your taste of volatility this week, the greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. How are things north of the Carmen Line, sir?
They're great. It's a lovely day, beautiful day, all is well in the world. Kind of a weird one, right? We've, it's early in the day as we're listening to this. So if you're catching this as in podcast form, when we were open down almost 30. We've since kind of rallied it back, as much as down 14, 15, and we're sitting here down 20. There's zero interest out of VIX options in anything happening. It's kind of got me wondering whether, they're looking at the market and saying to themselves, maybe, this seems a little funky here. Maybe, maybe we're going to flip the last couple days on their head and going north, open down and up instead of the other way around.
Yeah, because otherwise it'd be boring. It'd be the same story over and over again. Let's reverse the script. That makes even more, or perhaps even less sense. You guys be the judge as we head on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. Mark kind of gave you a good little overview. There's, of course, the portion of the show where we break down the world of volatility, and it is another kind of weird one, kind of topsy-turvy, and a lot of people scratching their heads as to what exactly is afoot in this market. As we're sitting here, as Mark alluded to, we were off a little bit more, about 30 handles, and the S&P off about 20 handles now. Right about 0.8% in the S&P. The Dow off a little bit more than about 1.1%. The NASDAQ, as always, kind of dancing to its own tune, off only about 2/3% actually over there. And we're seeing gold and oil off as well. Gold off, oil yet again, 51.5 over there in WTI land. Oil just cannot maintain a bid out in that land, but we've seen vol in that space annihilated, so much so that I believe even the Journal had a write-up about it this week, just talking about how much OIV, they love quoting their percent of percents, and what a big percent move we saw out in OIV over the past week. OIV, of course, the VIX of WTI. Speaking of ye old VIX, our fickle mistress on this show, hovering at about a 21.20 or so right now. We got as high as 21.5 is pretty much the level, 21.52, 21.53. Flirted with that level a couple of times and then bounced back off of it. Kind of a similar story we've seen in other days where we've had sell-offs and weird moves where the upside move, responding move from VIX is somewhat muted. Seeing that a little bit again today. We have been seeing multiple days now where we're seeing market reversals and market turns. So this is not exactly new territory for VIX and volatility traders. The volatility of VIX also remaining elevated, but still kind of in this range of right around the 94 level this time. Let's see, this time last week. So yeah, in VIX cash, we're about a handle and change lower than where we are last week. In VVIX, we're about 3 points lower than where we were last week. So interesting stuff out here. Mr. Meatball, you kind of just broke it down for us a little bit. What is catching your eye out there in all of this crazy madness? I'm not sure. I'm getting another call from you. Let's get that. There we go.
Yeah, weird day. We continue to see just a tepid VIX. So I'm wondering whether the market is really primed for a bear market or whether we're coming to bottoming. I'm also wondering, why in the world the Russell 2000 is after getting just pummeled, right? So the market's getting pummeled and the Russell 2000 is green. Explain that to me. Whereas yesterday the market's pretty flat, but the Russell 2000 is getting pummeled. The Russell 2000 is the craziest of crazy people.
We should tell our Russell friends on the TWIFO program how much you love and appreciate their product.
I like the product. It just has nothing to do with the other major indexes, which is weird, and you're not used to seeing it that way. We got another sea of red. But they've been, we're kind of going to the European close. It'll be interesting, Mark. We're not usually on during the European close. So our listeners don't usually get to hear our analysis of kind of the weirdness that abounds at 11:30 Eastern, 10:30 Central time in markets as London and France and all those places close in Europe.
Once we shake off the impact of all those crazy Europeans, make the markets American again.
They either go risk on or risk off into the close. It's really funny. When they've been risk off all day, they'll add some risk, and then when they've been risk off all day, they'll risk on all day, they'll take some off. It's really funny the way the markets tend to move around those Europeans.
Well, Europeans, unlike the Asian hours, the European hour, we always know there's been a strong contingent for volatility in VIX and SPX in and around that central, especially France, that French region. For whatever reason, there's a large penetration of institutional volatility in SPX trading there. There's a growing bastion of that in Asia. We're starting to see that. Look at the SIBO event in Hong Kong and others. And I've been hearing from funds, a growing community of funds in and around Hong Kong that are trading this stuff, but it's still burgeoning, whereas in France it is well established and has been for some time. Still a mystery to me how France became the European mecca for volatility. That's a conversation for another day. Mark, we always like looking at the VIX futures curve here as well. I saw an interesting tweet. I think it was one of your buddies, the Thompson twins. I believe it was yesterday, and he was kind of just almost throwing up his hands at the futures, pretty much saying, VIX futures here where they're pretty much, they were at around 20 almost across the board. He's like, the market's just saying, we give up. We're flipping a coin. We don't know what's going on going forward, so just pick them. Kind of a weird time for the futures.
Yeah, I mean, we are getting, the futures aren't moving, the VIX isn't moving, nothing seems to be able to catch a bid. And I've not seen this behavior very often. It's certainly strange. And so I'm, just really fascinated in kind of how things progress as over the next couple of weeks. I don't know what to make. Right now we're fully backward, but everything's on top of each other. Jan, Feb, March, and April, May, and June are all within 50 cents of each other. You just don't see that type of behavior.
So you're saying our friend 50 Cent is to blame? That's what you're telling me.
Yeah, I don't know what to. No, but there's somebody moving the other way today. We can't wait to talk about that type of price action. We've had a very large buildup in open interest in one option in particular over the last week.
Let me break down the futures here, then we'll get into all things VIX options in a second here. The futures, like you mentioned, ever so slightly kind of weirdly backward right now. We're seeing the cash right around 21.20, like I mentioned. The D's future pretty much right there as well, like the nickel or so, 0.05 below where the cash is. Then we kind of get down from there. So we're seeing the Jan future right around 20.60, so about a 0.6 discount to the cash. And as Mark mentioned, the rest of the futures are kind of right there. The Feb future about 20.2 or so off of that. Excuse me. And then let's go to ye old VIX. Like I mentioned, hovering in that 21, now 21.30 or so range. We'll have Mark break down the top trades in a little bit. But first, what we're seeing out here, listeners, is in terms of size, the top 10 hot VIX strikes, the big VIX, let's say, action points here coming into today's action. The big open interest positions. Number one, let's just go top to bottom. Number one with the bullet, the D's 15 puts 255,000. It's pretty much $250,000 open there. Number two, the D's 30s. Once again, the 30 strike still hot and heavy. 237,000 contracts there. Number three, the D's 35s, 203,000. Number four, the Feb 37 halves, 202,000. Number five, D's 20s, 190,000. Number six, D's 17 puts 190,000 there as well, so a couple hundred contracts difference between 5 and 6. Number 7, the D's 16 puts, got a feeling I'm going to be hearing about some more in that strike range coming up, 189,000 there. Number 7, a lot of tight stuff here. The D's 37 halves, 189,000 too as well, so almost tied. And what are we at? Number 8 here, let's see, 1, 2, 3, 4, 5, 6, 7, 8. Number 9, the Jan 30s. With 180,000 and round out the top 10 here. The D's 20 put 157, almost 158,000 going in there for our top 10 big hot VIX strikes. Mr. Meatball, you said you've been paying attention to some big VIX trades. What's been lighting up your tape today, sir, in VIX land, and just this week?
Yeah, there's a customer that's out there buying January 16 puts. He's bought 100 and looks like on his own, he's bought 75,000 this week. Probably a hedge against some sort of a short play, but that's been kind of interesting to me. That has been where somebody's decided to put up some sort of vol hedge. Kind of interesting.
You like that level, the Jan 16?
Yeah, that's basically just a return to, to 15 VIX where we were at a week, 8 days ago, something like that. So and that could actually outperform some sort of, I like that if they're short something else, I like that combined with SPY puts. One of the things that I was talking about today is that realized vol is now officially way more expensive than implied over the last 20 days and the last 10 days. There's premium is cheap in a relatively speaking, and in that kind of scenario, you have to ask yourself, why wouldn't I want to have some sort of long type option trade.
Yeah, I think the Volex pokers just perked up at that. Those moments are few and far between when realized takes the crown from implied. Those are certainly times that there are opportunities out there afoot in the marketplace out there, and worth noting. Looking at some other prints that were going up earlier this week here. Unless you have something else catching your eye, sir. So coming up yesterday, Thursday, of course, we saw the Jan 30s. They were pretty active. That was the big print of the day. About 23,000 of those hitting the tape right around noon. Right, pretty much a little bit off, about a dime off the bid or so for 51 cents. 23,000 of those bad boys. That was opening paper. So opening upside, 30 strike writing. We have seen a lot of action on the 30s. Usually it's the other way. People like to load up on the 30s. Maybe this is someone deciding discretion. This is opening though, so clearly not. So they haven't piled in to the 30 strike yet. So maybe an opening sale here, which is interesting in and of itself. Or they got themselves a nice juicy scoop on the 30s. Then we saw the Jan 35s also active this week. Also on the bid, interestingly enough, not as much, not quite 1-to-1, and not quite the same time. So it wasn't a spread. 20,300 of the 35s going up for 41 cents as well. So a dime off, but several hours later also on the bid. So maybe someone deciding to sprinkle themselves a little Jan upside, even though they were many hours apart. So even though they seem related, we shouldn't make assumptions here. And also kind of coming in right off the bid on these. Actually, looks like off the bid. Yeah, even though it was about 15 cents wide, they came off about 6 cents off the bid. So that's actually kind of wide for VIX land. Usually things are a little bit tighter out there. Also saw, looks like Mark, a little bit of a funky, I guess you can call it a four-way, a bit of a roll from Dees to Feb. It was the Dees 1922, excuse me, call it a strangle, if you will. Call it, the 22s are kind of meaty now too, so it's a tight strangle. 7,500 times paper doing that. Let's see, they did them both kind of as they are wont to do in VIX land, doing them both exactly mid-market here, done as a spread on the SIBO, of course. Let's see, if they did it as a unit, as a strangle, they did it for, 116 combined, and then they come in around and also did the Feb 27.18, so giving themselves, looks like a little bit more room to run on the upside here in Feb. If they are indeed rolling, it's hard to tell. This is small size comparatively for VIX. 1827 doing that 7,500 times, so the same size. Doing that, if they did it as a unit, then they did that for 241 combined. Again, 7,500 times. It is opening on the 27 calls. Everything else, it's murky. There's too much OI to really know. So what do you think about that, Mr. Meatball? If you had indeed Dees 1922, let's say it was, that's a really tight strangle, particularly these days in VIX land. So if they are taking it off, then perhaps give themselves a little bit more room to run. What do you think about rolling it to Feb and giving yourself perhaps a little bit more? It could be a risk reversal too, but that would be interesting as well. The 1827, that'd be a funky risk reversal. So which way do you think you're leaning, strangle or risk reversal? And then what do you think of it?
My guess is it's probably the strangle. We've actually been seeing a lot of strangle trading going up. And it's because nobody's sure exactly where it's exactly going to go. And this goes away with, a trade I saw on Wednesday where, we are starting to see some of that sell put. We're still seeing some of that sell put by call spread trade go up. We on Wednesday, a customer did the Feb 22.28 versus the selling the 41 put. So there is a lot of that kind of, we're not sure what to do and what we're doing with this stuff type of trade going on here. And that is kind of what I'm looking at. That's why you would do that trade, is you would do, you're rolling one and thinking, hey, we're going to go somewhere between now and the end of February. I just don't know where.
So, Mark, we've talked before about, our old friends, the 1x2s, the call 1x2s in VIX options. That's very popular. We started seeing people playing with that ratio a little bit, 1x3, 1x4. Let me ask you, what do you think about a nice 1x6?
it can work if we get a nasty move.
It looks like they got it, but they have the 1x6 fever, but they have it going the other way, actually. So maybe they're taking one of their other crazy 1x6s off. We'll see. It was the Jan 20. These are on the 16th, so expiring a little bit earlier. The Jan 2032 half 1x6 going up 5,000 times. Looks like paper actually buying the 20s for 230 and then turning around and trading 30,000, so 6x, of the 32 halves for 35 cents. So what is that, 210 versus 230? So doing the whole thing for about 20 cents if they are indeed closing. Let's see, it is both legs. We can't tell if there's enough OI on both, so they're not opening on both. But yeah, so perhaps, and this is the opposite, if the executions are to be believed, and there's always a lot of wiggle room there. But if this is going on the other way, then that's, I don't know. We've talked before about being naked units. This is aggressively naked units if they are coming in and putting this on. I'm going to assume they're taking off an old short 1x6 the other way. What do you think?
I think that they will. That's what I would do.
You probably wouldn't put on the 1x6 to begin with, but then you probably would take it off aggressively.
But when it works, you got to take it off.
Yes,
this is one where you have, a couple of days to maybe get it off, and maybe you roll it into something else. But that's one where you take your money and you run.
Take your money and you run in D. Let's see here really quickly. We saw, like you mentioned, the Jan 16 puts lighting it up yesterday too, about 16,000 times. So that's been kind of the trade du jour for a few days now here, going on again today. Let's move on to our old friend VXX. Everyone likes watching it around the even number levels, and we're back up north of the 40 handle, up another handle today. So VIX may be struggling to catch a bid, but VXX is not, again, up again north of the 40. So all those who have been anxiously awaiting some good erosion through the Jan expiration in particular may be gnashing their teeth right about now. Or maybe you're excited. Maybe it gives you a chance to add on to those positions. Either way, a little bit of upside here in VXX land. Let's pull it up, Mr. Meatball, and see if anything of note is catching our eye here in terms of the top 10 hot positions. Number one, still the Jan 10 puts. It's been there forever. Jan 15 puts, also super active. Number two, D's 30 puts. Again, we talked about those before. Those are now a little bit distant. 73,000 open there, followed by the Jan 5 put, 70,000. What is that? We got 4 there, then 5 here for the D's 60 calls. They seem more relevant than they did a week ago. About 60,000 open there. Then the D's 27 put, yet another bridge beyond the 30 strike for VXX to hit fairly quickly. 56,000 there. D's 28 put, also 56,000 there. Them coming down, round out the top 10 here. We got the Jan 33s. Those seem perhaps well-timed in retrospect. And the Jan 20 put, round out the top 10 here. 53,000 of those bad boys. Mr. Meatball, anything catching your eye in VXX trading land this week?
Yeah, it's been moving around, but I think the interesting thing is the lack of movement in it. We continue to see these VIX futures very range-bound, not moving the way you might expect. Not a lot of crazy trading. A little bit of upside here and there, but I've not seen what's interesting has actually been the resounding lack of VXX. I think a lot of people are, not overly positioning themselves in VXX and kind of looking for a opportunity to maybe trade VXXB, which will become VXX when that arises.
And remind us again, when is that again, sir?
End of January.
Yeah, so not Jan expiration, but actual calendar. How dare they get outside the options calendar? What are they thinking out there? It all lives and dies by the options land here. Looking at what was printing this week, not a ton lighting it up of note. Yesterday, it looks like a weird big D's upside print. Went up as a spread. It was the D's 60, 62, went up as a spread mark 21,500 times, printing both legs for 3 cents. So I'm guessing maybe someone wanted to just close out a bunch of D's upside in VXX, and they got a house to help them do that, and to print both legs, do the spread for nothing.
That's what it appears to be.
That's what it appears to be. So they got someone to trade for both the 60s and the 62s for 3 cents. So interesting there. Good to have friends, I suppose. Help you take things off. So yeah, someone deciding perhaps that 60 strike a bridge too far. It's only, 20 handles. It's only a 50% move in VXX. We've seen crazier things. Not too many, but have seen crazier things out there. Since I touched on it earlier, let's just pull up our old friend OIV, see how we're looking right now. OIV, of course, making some headlines there. Why does it not want to give me a quote in my old friend OIV? Let's just see. Well, we'll pull it up. Last week, of course, coming to Showtime, it was at a 40. We are well below. That was 15 points lower than the previous week. Now let's see if I can get this. Here we go. Pull it up, please. There we go. Where are we? Now we're at still at about a 40 again. So we're kind of, I guess, around unched from where we were at this time around last week. That seems a little weird. I'm gonna pull up, make sure this data about our 1 year high on OIV is up to nearly 195. So well off those kind of spike levels. Those are costs in and around all the OPEC madness that has gone on of late. Gold vol also can't catch a bid. Still not feeling the love out there. Speaking of love, though, we'll give you guys a little bit of love here on the show. We'll do a little bit of some quick vol voicemail, then we'll have to call it a show, listeners. So we'll head on there really quickly with some of your questions in the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get to. Actually, I think I promised that I would reveal the answer of our Apple poll here on Volatility Views. I am a man of my word. I shall do just that. We still have a couple days left, so if they don't listen to this show, it's still a mystery to you. If you haven't voted, head on over to @options. Get your vote in. Our question was about Apple again this week. We wanted to ask you really quickly, what is the largest open position in Apple right now? Use your spidey sense. About 40% of you still saying it's the Jan 2020 200 calls. Jan 250 calls were actually, the DS 180 puts were number 2 with 26%. The Jan par put with 15%, and the Jan 250 call had 20%. And I have the actual documentation here for, let's see, I have the actual. The answer is the DS. The answer is the DS 180 put. I'm trying to find the actual numbers for it so I can break it down for you. There's some reason they're not showing up here either. Again, the gremlins having fun with us today, listeners. But the answer was firmly the DS 180 put. They were well above anything else there in terms of overall. We'll give you the top 5 breakdown when we find that list for you. We'll put it out for you so you guys can see for yourself. But yes, spoiler, all you who thought Jan 2020 200 call, that makes a lot of sense. It was in the money not too long ago, and there are a lot of Apple zealots out there, so I can see why you picked that one. But it was indeed the DS 180 put. So, Mr. Meatball, you were actually correct, sir. Well done.
Oh, nice.
All right, let me get back to our questions here. Where are we? There we go. All right, we got, let's see, a couple here. Let's close this to get, there we go. All right, so F96 wants to know, is there a listed equivalent to trading a variance swap? If not, what is the closest approximation? OTC variance, big in the vol space, obviously not so much in the listed realm. We've seen attempts, to replicate that, most notably the CBOE's variance futures. They've had middling success with that. They've tweaked it a few times, trying to keep it more in line and pace with what the OTC vol crowd wants. And it seems like the latest revisions have engendered more interest, but still, it's not lighting up the charts. I don't know, Mark. What are your thoughts on the current state of the variance future over there at CBOE, and then maybe any other listed offerings you can think of?
Yeah, that's about as close as you get to variance. If the the real index guys could ever get something off the ground, that would have been a pretty decent copy of that had the non-squaring of a variance swap. So it would have really created what amounts to something similar, but it doesn't trade. Closest thing is really running a strip in the SPX or in SPY. For your retail trader, the closest thing you're going to see is maybe a delta neutral straddle, if you manage to straddle delta neutral.
Yeah, why go through all the hassle? If you can handle the fun of gamma scalping, then the delta neutral straddle is probably your best friend at the end of the day. Let's see, interesting one from D-Bags. Good handle. Which new volatility product are you most excited about for 2019? That's an interesting question. I may have to purloin that for perhaps a question of the week. That's a good one. I can think of a couple off the top of my head that are supposed to be launching next year, right, Mark? We've got, of course, the Scott Nation's SKUDEX, Valdex. We've got the ever on the horizon spikes from MIAX, NASDAQ. Well, they're doing the Volex. Of course, we have our buddies, the Real Vol, and their indices hopefully maybe going live next week. Am I forgetting anything on top of my head?
Yeah, no, I think that's about it. Obviously, the VXX roll is maybe, if you want to count that, that'd be technically kind of new, but yeah, I don't see a lot of stuff coming up that's overly exciting. I'll be honest.
Maybe I'll hold off on. It's a good question. I think we may. Let's turn this into a poll for our audience, and maybe we'll discuss it more on next week's show. I think that's kind of a fun idea. So we'll do that. But I have my thoughts. I don't want to maybe color the audience voting, so we'll leave it there. But we have featured a bunch on the show this year, listeners. So go check out those if you haven't. A good question, Mr. T-Bags. Oh, what a handle. All right, let's keep rolling to our final segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, welcome to Crystal Ball. Vic's getting a little bit more lift here coming into the end of this shortened show, about 2075 or so, up about half a handle or so right now. But, it's kind of a weird week because we're not really guessing where we're supposed to be guessing. We're a couple of hours away. So, of course, it was going to come off aggressively in the next couple of hours and come right in line with my prognostication from last week, which was 1865. So I'm about close to 3 handles off right now. But again, I'm picking for later in the day. So I was building in that cushion for myself. Mr. Meatball right now, the closest of the two, still over a handle off at about a handle and a half away. So Mr. Meatball playing the Russell roll,
right?
Playing the Russell roll worked for you this week, playing the ever optimistic vol buyer, fading your own position aggressively.
Yeah, no, I get it. I'm like I said, I got to bet against my book. I'm going to do the same thing this week, I think.
Let me guess, you're going to say 25 half, something crazy.
Yeah, let's go really nuts. Let's do 27 and a quarter.
I've created a monster here. 27 and a quarter. I'm not feeling the Russellness of what you're saying. Again, there's so many wild cards out there. Any errant tweet could send us spiraling in any direction. This trade war kind of hovers on a knife edge. They're buying soybeans, but we're not really friends. All that kind of nonsense going on out there. So that stuff is kind of the question mark in there. Usually, seasonally, this time of year, listeners, we should be in the doldrums. But you got to throw a seasonality out of the window when we've got. It's funny, Mark. Everyone on our network was right when they said Trump not a single-digit president. They were just a year off. Who knew?
Yeah.
Right?
Yeah.
They were just. He waited a year before he kicked into high tweeting gear and really got things off the ground. And,
I think
picked a fight with our biggest trade partner.
Well, it's been a combo of the Fed no longer buying assets, buying dollars, rates running, the economy of some of our partners slowing. I think the idea that we had that this approach to China didn't work. You take a look at their economy; they're having all kinds of problems over there. So one of the reasons why they're starting to come to the table is that they're losing. But you're right. I mean, not a single digit VIX president for sure. I don't know that he's a 21.6 VIX president where we are right now, but that's currently what's going on. I mean, there's a lot at the wall, right? These Cohen allegations are pretty inflammatory, although there's questions whether that's actually breaking a campaign rule. There is the issue with his election inauguration parties. There is the Russian investigation. There is our economy as a whole. There is a lot on the plate. There's a lot of news. Markets right now with no liquidity out there. I was listening this morning. I listened to the financial news for about half an hour a day, tops. But I was listening to somebody who claimed to be a huge market bull, and they asked if he was buying, and the answer was no. So until we get people that like the stock market to find a level where they're willing to step in, it's amazing. They love it at 29. They hate it at 26, right?
Yeah, of course.
Until we see that, I think you're going to see vol moving around.
Well, yeah, there's a lot that could happen. You're right. A lot could pop off over the course of the next week, which is why I'm going to edge up my number a little bit higher as well, not too obscenely high. Let's go up. I'm going to say I was 1865 last week. I'm still not feeling this bid here, but again, I could see these momentary spikes we're having right now. I'm going to keep edging up, not quite 20 hand. I'm going to say 19 and a quarter for this time next week. And not this time, listeners. It's going to be usual time next week. So factor in a couple extra hours there as you're doing your own analysis at home. All right, listeners, that music means we've come to the end of this abbreviated early session of Vol Views. Thanks for joining us and for powering through some of those early gremlins we had there. We'd love to have you guys with us. That's why we do the show for you, quite frankly. It's just us and you right now. No one's even sponsoring. We just love to get out there and talk some Vol with you every week. We want to make sure we got you a dose of the show this week. So if you like what you hear, support our shows, support the sponsors on our network we have, because they keep the lights on, they keep these shows coming to you free of charge. So go out there, check them out, thank them for supporting the network, and send them a little bit of love. Maybe if they have a service, check it out. And if they have a product, check it out. Might be worth checking out. And speaking of checking things out, Mr. Meatball, if they are so inclined to want to check out some products, maybe in the volatility space, where should they go, sir?
Here's what you can do. One, if you're interested, go out and buy my book. I've got two of them. The Option Traders Hedge Fund and Trading Options for Edge. Buy both of them. They're both good books. They're the next books you should read after you read a book like Natenberg's. And then two, if you want a smarter way to be long the market, smarter way to have S&P 500 exposure, you can reach out to me, Mark at Carmen Line Capital. And obviously, if you're an accredited investor, I'd love to sit down and talk to you.
There you go. Hit him up at mark@optionpit.com for, of course, all that learning, all that good education. And if you want to actually sling some capital in the vol space, maybe talk about how you too can get some VXX exposure and get rebates to do so on the downside there, then maybe give him a call over there at Carmen Line. Carmen Line with a K. Shoot him an email, probably better than a call. Mark at Carmen Line Capital with a K. Hit him up there. And on behalf of the Greasy Meatball, let's throw in the Rock Lobster. Why not? And indeed myself. I want to thank all of you out there for downloading, streaming, and subscribing who enjoy Vol Views every week. We love you guys. That's why we keep bringing the show to you. And we'll see you next week for more Volatility Views.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We are committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.